Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday the 13th, May 13th. The year is 2022. Let's talk trading. It's time for the weekly wrap-up. As always, these videos are for educational purposes only. Your results may differ from mine. And just a reminder, even though the week is ending, risk management, always have your risk management in place so you don't lose any more than you're willing to lose on any one particular trade. We'll take a quick look at the monthly chart. We're 70 pips off of the monthly low, now 71, 350 below the open, and 412 off the high. For the week, we are 70 pips off the weekly low, 181 off the high, and 121 below the open. And you can see we've had 1, 2, 3, 4, 5, 6, 7, 8 pairs that failed to fill the gap. The weekly gap. Speaking of, we got the weekly opening range. On Wednesday, we broke below the low of that opening range, and we haven't come above it. Right now, we're 36 pips below, but there was obviously a lot more profit to be had. For the year, we're 1,301 pips below the yearly open and 70 off the yearly low. Notice one quick observation here. We had 1, 2, 3, 4, 5, 6 days red in a row. We are now coming back. So any of you old buzzard reversal traders would know to be looking for a reversal after 3 or more of the same candle color in a row. And before we had 1, 2, 3, 4, 5, 6 before we had a green candle. So maybe that pattern's playing out again. Just have to wait and see. But for that inside bar from 3 days ago, you can see we broke it on the second day, both on the upside and the downside, but we're still below on the downside. Looking at the daily range, the pound's clocking in at 94 right now, but you can see there's a bunch of pairs over 100 with the beast, the old pound yen, clocking in at 209. Buy zone traders were rewarded in both directions as price crisscross the daily open. As you can see here, we hit a low, 2, 4, 5 hours ago, and then it rocketed up, basically did a coast to coast from the low to actually barely broke this high here, which was 122.47. So price actually got into the launch pad but failed to launch. And if this is the first time here, the launch pad is the 40. So 22.40, 21.40, 23.40s. There's something about the 40s where price seems to like to hit that and then rocket up to 60s and beyond. But it doesn't always happen because this is trading. As I mentioned earlier, we did a nice coast to coast here. You can see we went from the current daily high to the current daily low, all the way up and made a new current daily high. So that was a nice green rat run. You can see here they had one little run here, came back down, made a new low, made a second run. So for those of you who look for the Quasimodos, this, I don't know, right now this would actually be a Quasimodo from here to here. So this level here is a short, which just so happens to be in the red rat zone. So playing red rat reversal type trades here, you can see we've had a couple that were good for 10 pips or more. S1 bias is long. Price came down to S1 and shot back up. That was part of that coast to coast run. You can see right now we're about 71 pips above that S1. So anybody taking that trade was rewarded. The Bambino Flex indicator said to trade short. S1 was below yesterday's low. So taking that maybe from the open or off of the pivot, you can see that would have been profitable. And it said near pivot was short, so that trade paid off a couple of times. Speaking of pivots, we took out the pivot. Yesterday was a missed pivot. So we've got 2 missed pivots so far in May of 2022. We had 3 in April and 3 in March, 1 in Feb and 1 in Jan. A lot of missed pivots this year. So we'll wait to see if maybe they get taken out later this year. As far as the weekly, we missed this week's pivot, missed by 13 pips. You can see a couple weeks ago we had a missed pivot. So we've had weeklies since February, March, April, and May so far. As far as monthly, we still have a missed pivot this month, missed pivot last month, and a missed pivot the month before. So 3 missed monthly pivots so far in 2022. Very interesting setup here. You can see we got in that upper wick zone, tried it twice and was rejected. And this is what's fun to look at the ranges. Okay. So far, this weekly range out of the past or the previous 4 weeks, this only exceeded one of the weeks, the one 4 weeks ago. It's right around the 58 percentile, 251 with the ATR 243, average true range there. So we definitely beat the true range. Now, high minus previous high, we didn't break it. Previous low minus low, we broke it by 121 pips, which is right at the 50 percentile, but nobody's going to turn their nose up at 121 pips, that's for sure. High minus close, 177, 41 pips, close minus low. So far, right now, we've got 74, which it would be a nice trade. Looking at the high minus open, 60 pips, not bad for a buy zone trade. And on the low side, open minus low, 191. Once again, not bad for a buy zone trade. So on the weeklies, anybody like to trade the weekly? It definitely paid off. And looking at the sweet spots, simple price action here, you can see that we've had some really nice ranges. This hour is only 11 pips, and 2 hours ago only 15, but everything else over 20 pips to be had just trading at these horizontal lines ending in double O or triple O, however if you want to count the points. So here, a nice break across the 2200 all the way up to past 2240. Nice move there. We had a nice short right before then at the 90 line all the way down to 60. So once again, just trading at these horizontal lines when you see these types of ranges, very simple. We had an inside bar trigger here, which was just almost at the 2200. So once again, just almost textbook trades. You can see here on this inside bar at the high side, there was a nice crossover there, 2227, which, as you know, the 2225 would be a psychological, but it had already crossed here. This one was just more of another breakout. Once again, textbook type trading. Nothing that you really had to do anything hard to do these trades. I mean, you know what to do ahead of time. Price at the line, go with the crossover, set your stop loss, take your profit when the market smiles upon you. In fact, Walmart and I were talking about that, and he was saying, well, maybe we have to talk about it next month. But no, I said, just because the main topic is risk, we can always do it. We don't have to do that every day. So we might explore that, because we were having a debate over strategy and method and tactics. Whether you take your 2 pips, because he had a couple of trades where he was in for 2. And in fact, I remember calling one out. I go, well, if it does this, it's going to do that. And he jumped out of the trade. I go, why'd you jump out early? He goes, well, I took my pips. I go, yeah, but you're up for the day. Why didn't you let it ride? He goes, well, that's just not the way I trade. So, it's hard to argue with success, but it's just one of those things where, if you fight hard or you fight for a couple of hours to get 30 pips, but you see an opportunity, see here, 10, 20, 30, almost 40 pips in an hour, how do you capitalize on that? That might be the secret, but it's one of those things. I asked him, was your stop loss ever threatened in that trade? It was like, no. I go, well, were you ever in drawdown? He goes, well, maybe half a pip. I go, well, price has to range. It has to go one way or the other. But he says, no, I didn't leave pips on the table. I took the 2 pips off the table when they were there to take. So, but once again, there is no right or wrong, but I'm thinking there's something where you can have some tactics and a money management system where you take advantage and you take more. I mean, we've talked about it, in fact, we even have one of the money management screens here. Whoops. How did that get off of that? Money management, take the profit before the market takes it back. Yeah, you can always take 50% or part off the table and move your stop up. You can move your stop to break even. But you can't really control the outcome. But the only thing you can control is when you exit and whether or not you take the chance of it going against you. You don't want a 2-pip winner to become a 5-pip loser. But then again, do you want a 2-pip winner when there could have been a 12 or 22 or, more pip winner? You don't know the future, but you do know things that you look at, and some of these things are very, very, very basic. You might drop down, say you're looking at a 1-minute chart, and you get in the trade. Say you got in this trade right here, and the price goes up, it comes back down, and if you can sit on your hands, okay, did the candle close? You got a higher low. Same thing here, higher low. And then it went all the way up to here. Well, maybe, you take your 8 pips or your 7 pips as opposed to only taking 2. And that's what I am looking for. So you can see here, if you just, follow what the trade's doing. So here, it made an equal low, but then it dropped back down, but it didn't drop below here, and then turned around and went all the way up and closed here. It came back down, but made a higher low. Came back down, made a lower low, but closed still higher. Made a lower low, but closed still higher. And then it took off again. So it's just one of those things where some people say, well, yeah, you could snap a trend line. And it's whatever you can do, but you have a method behind it. So you're not always in the heat of the moment making these decisions where you're saying, well, I'm waiting for this signal or this break of structure or however you do it. It's just something that we'll probably or definitely will be exploring so we can maximize how many pips, we put in our pocket. So, fellow traders, I hope you put some pips in your pocket this week. In other words, you were profitable for the week. And I wish you a fun and safe weekend. So when you come back to your trading terminal, always remember, never forget, It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.